GM everyone, welcome back to another episode of Touch Grass Podcast. Today we have Behrin from Neutrl, someone we've been trying to get on for months now, and someone
Well,
we've been.
actually, since DCF God posted about it, September, I believe, Baron, we've just been after you. I'm very, very excited to
Right.
have you on the show, finally.
No, I appreciate being here, and I think we are supposed to meet in Hong Kong, and it got too busy, crazy busy last week. So yeah, I'm happy that we're doing this finally.
Awesome. Before we get into everything neutral and what you guys have, you're off to an awesome start. Why don't we kind of take a step back and understand like what led you to start neutral? I think giving you a high level thesis would be a good start.
Yeah, and then also like whenever we talk to like these egalitarian projects and new sort of fundamentals, and you also explain the trade for our audience as well, and that should give a foundation for this episode moving forward.
Yeah, sure. I'll try and keep it pretty simple. I mean, you can let me know if I need to expand. So basically, neutral. The idea took a long time to decide whether we actually create this into a product for DeFi. It's a trade that we were running that underlies behind it. So I think most people understand like Ethena now, or they understand to some degree the basis trade, where you buy tokens in the market, whether it's Ethereum, Bitcoin, whatnot, Solana, and then you short the perpetual. And then basically you just clip funding rates. And that's been a very common trade. It's the oldest trade, I think, in crypto, way before Athena like brought so much success to a synthetic dollar format on it. And I mean, myself, I've been quite bullish Athena after I got the initial FUD around it myself, because I initially started off in DeFi after leaving TradFi, JP Morgan, and private equity and VC like around DeFi summer. I was early to using protocols like Aave, Pendle, known Pendle team from when nobody knew who they were around those type of innovative concepts. And I thought that, yeah, DeFi would be the future of France or future of finance. I mean, it's been a bit slower, but it's still a lot of innovation that's happened. And I think Athena, after I got around the transferability items or just being a hedge fund that's tokenized and etc., creating some yield, I realized it did create a completely new platform in crypto, right? I mean, previously they created basically a new lending rate, a new money market rate, if you really think of it, versus what we had before. And I initially, around Neutral, we were running this trade called OTC arbitrage. So basically, we buy locked tokens um, at a discount. So you buy like Solana, AVAX, SUI, whatnot, ton, and usually paying anywhere between 25 to 80% discounts. That's from what is actually trading in the market. The difference is, yeah, there's actually a vesting period. So it can be a period from anywhere between a month to 1.5 years or whatnot. And what you can do to hedge this position now that you bought at a deep discount is you still go to the perpetual market and you open up shorts. So it can be on Binance, Bybit, OKX, Coinbase International, Hyperliquid now, and a few others, and you'd pay this. And basically, over time, the discount that you manage to buy this tranche in and the actual market short that you have, you can unwind that as vestings occur. So it creates a bit more of an asymmetrical yield versus like dependent on price movement, and it's less dependent on funding rates. So for instance, like Athena now or any other basis that's occurred, it's completely disappeared since 1010 last year, slowly. But basically, neutral is still vesting. Discount becomes a larger portion of cash. So sorry,
When
yeah,
you
now
guys
I'm
start
talking, right? So
No worries. When you guys start this kind of trade, like I think you guys were the first to kind of like you guys made it more popular on CT at least. Was it like in 2023 where I remember reading, I think it was Sticky or someone who made an article saying altcoins are gonna have, I don't know, 1 billion in unlocks every day or something. Uh, I don't know, every day or every week. Was it at that time where this kind of took off and people started doing this kind of trade?
so yeah, I think yeah, that's a good reference point. Largely, all coins have been from last cycle, say 21, 22 vintages. They've been unlocking, I think, like close to 5-10 billion a year now. There's just been a lot more tokens since then also, so that's going to increase as we go forward. So STIX, they're the largest broker in the space. think they did publish something. I've known them for a very long time. We used to run the trade with them. And I think I didn't answer one of the questions. You said, why did we actually decide to do this as a product? Because we were running this already privately. I actually spoke to Guy from Athena, and I was like, do you think this yield would make a difference? Is it something that you think is scalable? That, I mean, is it even worth doing? Right? Like, to be honest, into a product. And he looked through it. He looked at like the last year of returns that we we're making on many of the tokens across different cycles, like funding rate issues that we'd have. And he's like, yeah, man, there's definitely something here if you actually want to create it into a composable synthetic. And that was largely one of the main reasons why I decided to actually push forward and put a team together as from ex market makers and funds running it. So right now on the OTC side of supply is actually the bigger thing, right? So this trade isn't rocket science. There are like difficulties to it if you don't have your own like trading infrastructure and quants like analysis around it, etc. Because funding rates can change and you can affect the order book. But if you have built that out, maybe take a year or so if you've done it properly, it's not crazy. It comes down to supply. And like STIX is one of the guys that we do source a lot of tokens from. So Taran, actually the founder of STIX, when I talked to him about this idea, he's like, dude, yeah, this is definitely something he's been thinking about for a long time because it's not a new trade. So maybe CT didn't know about it, but all the big funds have been running this, like privately. They've just been making this delta neutral yield. They don't have to ever share it, right? And been doing this.
And does the fact that everyone's just talking about altcoins going to zero per se, does that paradigm change this OTC market or change how you view altcoins that you want to sort of participate in?
Yeah, the crazy thing is when we initially thought of Neutral and like making it a public product, even though this trade makes so much money, if you did like Celesta, if you did Celestia, Otia, or Avax, or Sui, or Solana, or like some of the other altcoins, people made a lot of cash. But like when we announced it on Twitter, people were like, man, everything is going to blow up. Like your hedges will blow up. Altcoins are going to do 5x, 10x, whatever. What are you going to do? Uh, I mean, we took a structural view, like really, when we decided to realize what was happening. If you look at the data, there's too much tokens, there's too much supply unlocking. It's not new. This has been every token that unfortunately comes out, if you really pull it, the best time they usually do, unless they're like a hype or something, um, is in the first like 3 months of like listing. And after that, it's emissions that take over, and there's just too many competitors or too many tokens like supply in the market. So tokens going to zero. I mean, most will. That's not. I'm not bearish crypto, right? Like I made most of my money trading, being a bull in crypto. But like most will go to zero because there's no actual new capital in the system since 21, 22. We're recycling the same money around and around and around. So once like the projects like move across, there's no marginal buyer, right? We saw the same thing with DATs last year. I don't know if you guys followed a lot of them, but a lot of the projects that were linked to DATs initially pumped, and they were pumped not by the amount of DAT being raised, but they pumped because people were just front running the trade. And I think most people knew that, or they were raising right for DATs. We were like, okay, you're going to deploy this much, we'll get in. After 3 months, all of those things are back below the DAT even announced, like way below. So it just shows you how capital's come and gone. Unfortunately, unless we bring in new players, most projects are going to suffer, right? Which is unfortunate for most of our bags, but it's what it is.
100%. I think so. Are you saying that even if we have like a paradigm shift in how these tokens are structured and stuff, the trade is still can be put on for all these past tokens that
Yeah,
still have this overhang?
yeah. I mean, you look at how many projects right now that are completely dead. Have maybe a lot of emissions have occurred already, but they're still sitting at a billion, 2 billion, some 10 billion plus FDVs. We haven't even heard of those names. Names we've known like 4 years ago, right? So I mean, and these things are still liquid. They're still traded by bots or market makers or something on Binance, on Bybit, on OKX, on Coinbase, on Upbit. Um, So man, there's like too much supply. So you don't need to be the shiny new project we're going after. We don't even go after like the shiny new things because those are harder to read what will happen on TG and stuff. There's other ways to play that delta neutral like funding and perps and staying liquid across exchanges. But man, like Sui and other things are still billions and billions of dollars worth of like FTV, right?
And wherein like out of all the examples that we've seen last cycle of not last cycle but like last year of OTC deals that have come across, the average crypto enthusiast probably doesn't have visibility into all these OTC deals, but me and KG having seen some of these, over the horizon of the unlock or like the vesting period, sometimes these tokens do end up pumping due to third party reasons or whatever reasons.
Yeah.
Does that and does that ever affect the liquidation price on the hedge? Like how does that paradigm work? Like what's sort of the maths that goes behind that? Is that something that happens more often than not? What's your take there?
Yeah, I mean, honestly, if the OTC market is pretty, I wouldn't say pretty, it's a big market on volume, but it's a pretty small market on information. So, I mean, there are things like OM, there's things like story, IP. Like, I mean, a lot of things are pumping, right? Like into these type of things. But firstly, if you need to be wary on what deals you do. So even over the last 2 months, I've seen like the same name like 8 or 9 times from people. And yeah, it's fun to trade it personally because maybe there's something there, or people there may be some sort of OTC shenanigan. But often, like people are selling OTC, they're not actually pumping the token. It, it's kind of weird because like yeah, something like a Ohm or something like that does do a 5x. I mean, there was River like 2 weeks ago as well. Maybe it's like, yeah, they're selling OTC and they're pumping to the chart, but 99% aren't actually doing that. And often before you do the deal, you need to actually look at what's been happening. So you can, like, numbers don't like lie around it. You can look at funding rates. You can look at what's happening on venue. You can look at how much supply is being unlocked and being moved around. And then, of course, nothing beats actually just talking to enough people. Right? The
Yeah.
difference there is that even with us, like you could, if you're running this as a prop fund, take a view and probably hold a hedge for as long as you want, just add more capital. Because we're running it as a product that's a synthetic dollar, we can't actually be that concentrated into OTC. So it's good for marketing, yeah, ODCR because it adds a kicker, and it's good for yield. It has paid more than anybody since we launched, like in November. But largely, we can only be like 10% of this entire thing in this ODCR trade. The rest has to be liquid. So it's just doing what Athena would do, or but not just stuck on Ethereum and Bitcoin across many things, or across 6 ARP or whatnot. But yeah,
So
there's enough. There's enough margin. Let's put it that way. Like it's not really a factor on sizing.
So do you think like when you make these kinds of, I mean, there's always something looming around, an opportunity. It can be a short term one, it can be a long term one. Like how do you decide like, okay, this is actually worth the money, and even though if it's maybe just a couple months kind of trade, whereas something that's low yield but it is more, it doesn't have the same risk appetite. How do you kind of decide when it comes to those things, when if it's worth the squeeze when it's taking these short term stuff?
Yeah, that's a very good question. Actually, it's something that I've been thinking about a lot, especially in this market. Like, what is the point of doing certain OTCs? They need to be quite safe. I think there's zero point of like trying to go and blow the lights out and make 40, 50% yield, and people will be like, how and what, and you don't understand, right? So, like right now, we're focusing mainly on it can't be too long because also the one aspect that we're doing is we're duration matching like the capital. We need to know, like, have a view that we actually will have enough of the capital locked or whatnot for the hedge duration if it comes to that. Um, so largely we target anything around 25 to 30% return in this market. And it's not massive. So it usually comes from the discount, and we'll have to negotiate hard for a good enough discount. Then take into account funding rates that maybe occurred, but past funding rates aren't really reflective often of what could happen going forward. So you have to like quantitatively look at what will happen to order books if you come in and enter, and then assume that maybe someone else is also doing this OTC tranche. So it may affect that. And then, so basically go very conservative on funding, like minus 100, minus 200, minus 300, 400% for like this like periods. Um, and then just look at yield. So right now we will not be chasing anything. If it was a bull market, you could actually go out and offer very big discounts. So for instance, like well, yes, some alpha, like we're actually doing a massive Solana tranche now. I mean, it's a top 7 token, right? Um, there's yield from staking, there's yield from funding rates. Even when funding rates do go negative and sold, it's positive over 90% of the time, anyway, even in this market. And then you get the yield from the discount. So we're not going to go and get a 40% discount on Solana. That never exists. But you're going to get a much smaller discount and you still probably earn over 20%. And I think that's fine for us to run.
And running this as a prop shop versus running this as a product, does the type of OTC deals you enter, like, is this the same philosophy for a prop shop, or is this more like because you're more public facing, more as a product, which is why this is the approach?
I mean, if we're a prop shop, we'd probably be the best crypto fund in the last year. Like to be on like the other stuff, we still trade um, like of deals that we wouldn't take in for neutral if they're too risky, or we don't think people would want to have that exposure. Or sometimes we co-invest to neutral too to actually get a deal done. Um, but if you're a prop shop, I would have done 80% into this trade versus 10% of how neutrals run. Like, because it's a systematic like view here, right? That most of these tokens, even if they pump, like you mentioned, if something pumps on a unlock or Bera like a week and a half ago, right? When unlocks happened, they did a small 2-3x pump there. Um, yeah, where is it now? So if you can actually hold the thing, it's fine. So thematically, it would be a lot more concentrated into this trade. There's nothing better. Like I think in crypto at the moment, if you want to remove some of the risk and you're not just going
Yeah.
full bullish.
Awesome. Awesome. I think we kind of set the stage. Why don't we talk about the growth and since launch? I think last time I saw it, the TVL was 230 million. Uh, and considering the markets we are in right now and this whole downturn, what do you attribute to this consistent growth in TVL for you guys? Is it because people just don't want to hold crypto and they just prefer yields? They're looking for more yields and they prefer to kind of bet on this trade. What do you kind of attribute the TVL growth to?
I think it's been a slog, to be honest. Like, I think even when you say 230 million, like to me, it's quite frustrating because I think our product would have been received even better if there was more capital in the system. And unfortunately, look, we're all in the space, so we know how it goes, but you can never
Do
change.
you have a number in mind? When do you have a number in mind? Was it like for TVL?
I thought we'd get to like 2 billion in 12 months. And that was what the reason was for like doing neutral. I mean, I spoke to a lot of OGs in the space. I looked at people, a lot of DeFi guys as well. Like you guys mentioned DCF God and a few others. Like, and what have we been doing? Like I've been yield farming stuff for a long time, but yields will go like in a bear market. Like we're the only one in size now, like offering over double-digit yield. And I know it's only 230 mil, but everything else is around like 3%, whatever, right? So it's look. I think two things happen. My mindset was we're always going to launch. We're not going to sit and wait and like wait for better market conditions. We got this trades. We're already running it. We know we have edge. It may not be the 30-40% yield that we could do. We were doing actually 60% year before. So that's not going to launch with that. That would have been very exciting. But 10-10 happened. I was like, okay, most funds have actually lost a lot of money, right? And we don't even know yet. Like everybody, let's be serious, even though we're wavering around here. And then stream happened, like 2 weeks, and we were gonna. And I was like, geez, man. Firstly, 10-10 was like apocalyptic for traders, And then stream, like DeFi guys were fine, right? Because they were mainly delta neutral or yield farming. Or then stream happens, and then curators were supposed to launch like 200, 300 more like NUSD vaults that they were shopping to us, right, for 6 months, are basically bankrupt now. I'm like, what do we do? Like, we either keep going or you don't launch. And the team and I were like, just keep going, right? So yeah, it's 230 mil. I think why it's increasing is um, initially when we before we started was also quite important. Like in crypto, people do a lot of private deals, right? But the problem with most private deals is the underlying strategies for these deals. People have gotten into max extract type of mode. A lot of LPs and funds, so they go to a project and be like, I need to make 30 to 45%. Now the yield that these projects actually make are probably closer to 5%. Right? So then what happens? The rest of it gets paid out in their native token once they PG and whatnot to top them up. So I was like, we will do a private deal because we need to make sure. You always have to solve the cold start problem, but we'll only pay out what we generate. So before launching Neutral, we already were running 50 mil from like private guys. Those guys have all been paid out like a yield, like a return now. There's no tokens or any of that. And since then, I was like a bit concerned because I was like, okay, the market's really bearish. What could happen? But I think it is just largely being the fact that we're offering like a better yield. I still don't think most people know about neutral, and I still don't think that people are that bullish on neutral either. It's just basically that it's only yield like um,
think the native guys are pretty aware of it. I see it all the time. Like, and
okay,
also
I
I
okay.
think
see it all the time, Baron. Like honestly, like I'll tell you, our circles after DCF God posted, I guess that's where everyone aware. But then when I go out to these conferences, like people, the way they talk about the evolution of DeFi, it's like what's the last three things that have blown up? It's probably like Pendle, Ethena, and now Neutral. I think
uh,
you're underselling yourself. I think people understand this a lot more than you expect.
and also who would have thought that metals would go on this parabolic run and everyone, all the crypto guys would, full stack their whatever cash they had left. But yeah, I mean, so many variables for you guys, maybe, but glad to see that it's still growing. And I mean, we need novel stuff. And but yeah, another thing, a question I had, and I think regarding the yield. Uh, Can you like I know we talked about the OTC trade and how it works and stuff, OTC arbitrage stuff. Is there any other source of yield that you guys are kind of capturing outside of that? I know that you guys do some Pendle stuff, you guys, on
Oh
curve and
no,
stuff.
we don't do anything, any DeFi stuff. What we so neutral is on Pendle, like Essing is. I mean, that's just like our USD is. The only thing we do is you're either doing OTC arb or we do basis. So the funding rates are good on Hype, or funding rates are good on Sol, or whatever. Right? We'll run that as it is. So that's liquid. That's literally buying it in the market, shorting like market liquid, and then we'll also do. We have yield bearing stablecoins. So like Sky, it's USDS and Athena. At the moment, we don't have to stake that. We get paid the yield either way on certain accounts, but that's largely all the yield at the moment. I think like the DeFi thing is it's not something we need to play in uh, right now. I think like yeah, look, there could be an evolution of neutral one day where we could do other things, but right now we're keeping it quite vanilla.
Got it.
It's still early.
Yeah. Another question I had was you have this, I think when on 1010 itself, like this whole debate with Ethena and synthetic stables, it's not actually a dollar, it's just, a hedge fund on chain, everyone was kind of debating on that. You also have like a synthetic dollar version with a different strategy underlying. And it's one of like the major criticisms for these different type of stablecoins. What are your thoughts on that? And can you kind of explain some of the risks and how you guys prevent it, just for our audience to understand before they actually get into a trade like this?
Yeah, I mean, to be honest, I always try and stay away from like calling us a stable coin. Like I think even there is only really like one stable coin that's probably like PayPal, USD. Like everything else is some synthetic version or tokenized. we are a tokenized hedge fund. Like I think like we can't actually lie around that. I mean, it's a trade underlying it, right? It may be delta neutral and it has the same properties as um, equating to $1 or something because there's a reserves and there's collateral behind it. But I think the main thing you'd have to check for most of these, because we're not the only one. There's quite a few of uh, there's a lot of different type of collateral being used at the moment for these type of synthetics. And I think the main thing I always check when I'm even using other protocols is reserves. Um, what type of reserves are there? Do they need haircuts to those reserves? Are they actually liquid? Are they actually transferable? Are they is there time where you can't actually get out of the position? So something could be worth $100, but if it takes 30 days to get out of it, it's not really worth $100, right? And I think that's the main thing I look at. I mean, our trade is this is what I mentioned in a sense, like if we were running this outside of neutral, we could be a lot more in the locked ODC arb trade. But we can't do it if we're building it into a product that people are going to use it like composability on Pendle or Morpho or at some point and a few other places. And most of the stuff actually behind it now is just liquid. It's only 3% in the OTC arb at the moment because like a lot of it is closed out. 97% is just liquid and stable coin. When I say stable coin, I literally mean just Sky and USDE and or USDC and USDT, and the rest is just running like some basis. But even with basis now, basis is dead. So what's the risk of it? What's the point of running basis if you're earning very little? So it's just sitting in stablecoin. So it's mainly reserves, right? Because I think collateral is the biggest risk in any underlying thing that's calling itself a dollar. To be honest,
That makes a lot of sense. Behrin, we are close to time. This has been awesome so far. I guess me and KJ both geeked out on questions that we've generally had.
it's very good questions, over honestly. So I can see I had 3 months to think about it.
More. But yeah, Baron, I think last question for our audience: what is next for Neutral? You talked a lot about DeFi composability. We talked about different trades. We talked about synthetic dollar versus not synthetic dollar. What does this look like next 6 months, 1 year? How are you guys thinking about it?
Yeah, so I think the market has changed a lot. As I alluded to earlier, when we launched, there was an initial plan of there was this was pre-stream. There's an initial plan. We worked with a lot of curators that had approached us, opened us up on lending markets, and allow a lot more leverage into the system, etc. Out of the neutral. When stream happened, some of the curators that I had heard when they were still wanted to do stuff with neutral, I wasn't sure they on their own solvency, like depending what else they were doing. I didn't want us to like jump the gun and start offering any of these markets. And then even if we're building a good underlying project that's offering yield, if somebody blows up for a different reason and associated with NUSD or neutral, then we're dead in the order, right? So right now, I think the play is to continuously just create some strategic partnerships with things that we've been watching. So, for instance, Strata, which started off initially with Ethena, they've tranched neutral. So they've tranched into junior and senior tranches. And I think what's happening there is um, what we've seen is there's a lot of vaults coming into the space. I don't know if you guys have like, noticed this, but everyone building like vault infrastructure right now. And the funny thing is, like, the vaults still have to be powered by some yield, right? It can't just be Aave 1%, 2%, whatever. Like, guys are looking at it. So I've been chatting to some of these traditional guys that are even coming in to use neutral behind it. So you may not even see like fully NUSD or SNUSD, but it'll be the yield powering that. And I think these more the other big thing is, to be honest, like if we don't get it fully, there'll be an issue. But it's actually distribution is the most important thing in crypto, and even if you have the best yield, but people don't know, they can't access it. So we're looking at working with a few exchanges. There's a few perp dexes that have come out that say they want to do things in neutral. I'm even skeptical of that. The fact that you're asking us to do something and we've only been live for 3 months, like worries me, like your risk management. So I think like we'll wait and see on how we choose that. But I think it's just growing slowly, right? There's like no point to come out and like just destroy yield the markets. Like I think there's an issue in crypto where people also want to get things done very quickly, and which is great in a bull market. You have to move fast, but in this type of environment, you rather not make too many mistakes.
100% preservation mode. There is time to go full gas on.
Yeah, just
uh,
keep paying yield, right? And people will see and trust it after a while.
100%. I mean, 10% is a lot. But yeah, Baron, this was awesome. Thank you so much for your time today. I know we're on, I think we're past our time, but this was awesome. I love talking markets and getting to understand some of these behind the scenes stuff, how it works, and all. So thank you so much for your time.
No, appreciate it, guys. Thank you very much.